Hi, this is Tom Bacharach from RMC to talk to you again today. I look forward to talking to you today with Michael Rindenau, who is the Director of Marketing here at RMC. And one of the things we were discussing was a lot of times we just talk to our clients and consumers about looking at people's risk and risk profiles. And we say it's important for them to look at it because it's been very exciting, we'll call it as a word, over the last 3 or 4 years. And we have said, you're in a hard market. And one of the things that I realized is most consumers, most advisors don't necessarily understand what a hard market is. So I've invited Mike on to talk to us a little bit today about giving us what it means for a business or a business owner to be in a hard market and why they should look at it and how that's affecting prices. So Michael, tell me what a hard market is.
Hard market is defined as an upswing in the market cycle. Premiums increase and capacity caused by falling investments return to carriers, increase in frequency and severity. Cause of a hard market varies, and it includes weather conditions which are unpredictable, natural disasters, including major floods that have occurred, windstorms, collapse of structures that we've seen, unfortunately, flooding in various parts of the country. It affects all of our carriers. Emerging threats, cyber. Cyber has a major impact on return investments as claims have risen with various carriers. We've seen excessive fee litigation in changing the fiduciary market, ERISA, class action lawsuits. Carriers have paid out in excess of $1 billion in losses, or possibly more. Various carriers rely on telematics and loss control to determine risk, so they have somewhat of control of what they're underwriting. Florida market has been an issue, again, as we're currently in the hurricane season. Cannabis and CBD industry has incurred some claims, which is somewhat new to our carriers, and they're learning how to underwrite and understand the risk. Auto classes, many of the carriers are purchasing reinsurance. Auto has not been profitable, especially the long haul, the trucking industry, usually anything on wheels. 2022 personal and commercial product lines will show rising premiums as underwriters look to compensate for prior losses incurred. The hard market will continue, at least for the last quarter, and there may be some relief in 22 to 23 in various lines of coverage, and that should compensate the carriers along the way.
Thank you, Michael. It's interesting you say that because it really comes down to, I think, underwriters having to look at different risks in different ways, because we have things like climate change and we have lawyers going after things a little bit more. We have wildfires out in the West. The way that it was explained to me early on was a hard market really is a way of looking at it like basic economics. Underwriters only have a certain amount of risk that they can give out. They want to do it in the best way that they possibly can. So it really comes down to almost being supply and demand. Would you agree?
Absolutely. Yes.
Super. All right. Well, is there anything that we can do to look at these markets based on the hardening of the market, or to help our consumers and our clients and business owners in general to navigate through this hard market?
Yes. Well, as we're working on new opportunities at RMC Group, we need to understand the risk and make various suggestions to our prospects and our clients, making them aware to improve their experience and help them reduce their cost. We work for them, and it is our position to provide them with our best possible product at our lowest cost and the broadest coverage available in the marketplace.
Well, super. Again, Michael, thanks for spending a couple minutes with me today. I may have to bring you back for more insights on property and casualty as we go forward. So for the people out there, thank you. And again, stay tuned for our next installment of RMC Conversations.
Thank you.